Good day, welcome to this platform. This is financial accounting. Our topic of discussion today is final account of a sole trader. Alright, we all know that a sole trader is a one-man business. Alright, a business owned, managed, and controlled by an individual. And in a sole trader, it does not have a legal entity, which means that in accounting, a business that does not have legal entity will always be affected by the accounting concept called entity concept. Alright, and that concept says that a business organization is distinct from its owners. So the books of accounts of the business organization should be kept separate. So in this account of a sole trader, we shall see something called drawings. Alright, so let's start. The final account of a sole trader is divided into two. We have the statement of profit or loss account, which you all know as your trading profit or loss account. Okay, so this is the first segment, and the other aspect is the statement of financial position, which you all know as your balance sheet. Now let's start with the statement of profit or loss account. Okay, this is the format. It's slightly different from what you used to know, which is the T format. Here, our sales, we determine our net sales. As you can see, sales, I remove returning. So what I have here is my net sales. After determining my net sales, I must determine my cost of goods sold by going through all this way, just the way you prepare your trade profit or loss account. We go through, here's my cost of goods available for sale. If I remove my closing stock of inventory, please note, alright, if you see inventory, your stocks means inventory. The opening inventory is your opening stock, closing inventory is your closing stock. So we get our cost of goods sold. Cost of goods sold is moving from your net sales or turnover. You have your gross profit. Then we had other incomes, discounts you received, your rental income, and all the rest you get. So what we have here are the summation of all incomes to your gross profit. Then your expenses is deducted. This is when your expenses are deducted from the total income. You have your net profit. So with this, your trading profit or loss account is ready. Questions may come. Why do you prepare gross profit? Alright? And why do you prepare your net profit? Gross profit is the temporal profit of a business organization. It is the profit derived before deducting expenses. While net profit is the actual profit. Why do we call net profit the actual profit? Because it's a profit derived when all expenses has been taken into consideration, which means all expenses has been deducted. And this is how the final account of a sole trader can be determined. The next aspect, which is statement of financial position, which you all know as your balance sheet. Alright? The statement of financial position is called statement because it shows the list of assets and liabilities of a business organization. Remember the accounting equation. Your accounting equation says that your capital equals total assets minus liabilities. Which means if I have my assets, I can determine if I have my assets and capital. If I have two of any of these values, I can get the other one. Okay? Now, this is my non-current asset, is my fixed assets. Alright? So, this is your cost. Remember your historical cost concept in our previous topic. That all the assets, all the non-current assets of a business organization should be recorded at the cost of acquisition, not the net realizable value or not the market value. Alright, so as to ensure uniformity in recording of business transaction. And don't forget, the reason why we have accounting concept and convention is to ensure uniformity the preparation of accounts. So you can see our assets must be showed at the cost. Then you can now show your accumulated depreciation till date. Then you have your net book value. Your net book value is derived by deducting your accumulated depreciation from the cost of an asset. So these are your assets. These I just selected to. We have so many non-current assets, all right, which you all know as your fixed asset. Then we have your current assets, the asset that can be easily converted into cash. Your stock. Please note the stock here refers to the closing stock of the business organization. Then we have all these. All right. So when you sum up your current assets with your fixed assets or non-current asset, you have your total assets. Then the equity and liability. All right. The equity and liability. Don't forget that my assets from this formula, my asset will be my capital plus liability. Now, if you look at this, with this, we can prepare a balance sheet or statement of financial position. Here is my total assets A. Okay? Alright? Now, I have my equity and liability. My equity refers to my capital. Alright? While my liability refers to all amounts owed by a business organization. Now, this is the capital. I had my net profits. So I have these. I deduct drawings. Don't forget, at the beginning I told you that we have drawing, because if a sole proprietor does not have a legal entity, so they will be drawing the books of accounts. So we deduct drawings. Okay. Then if we have long-term liability, we'll put it there. If there's no long-term liability, we have our current liabilities. So when we add our liabilities to equity, it will give us same value. So this value is my capital plus liability. Can you see? So my assets must be equal to my capital plus liability. With this, my balance sheets or my statement of financial position is what? Equal. So with this, I've been able to introduce to you guys how the financial statement of a sole trader looks. So we are going to take a question to solve the statements of financial position and statement of profit or loss account of a sole trader. Thank you. Yes, we have the question for final account of a sole trader before us. Let's see how we can do justice to it. Okay, all right. We are giving the question here that final account of a sole trader. That's the topic we're looking at. Now, the following trial balance was extracted from the books of Olowolayemo Omoba on 31st December 2013. Okay? Now, we are giving from premises down to stock as at January 2013. This is a trial balance. You can see the total being equal. Now, we are told to prepare a statement of profit or loss accounts and also a balance sheet as at a statement of financial position. Now we are told we are given the closing stock as closing inventory, and we are told that premises, we should depreciate premises 5%, motor van 10%, and furniture 10%. So let's start. How do we start? The first thing, let's write the name of the person we are preparing an account for, which is what? Olowolayemo Omoba. This is the person we are preparing an account for. So the name must be boldly written there. Okay? So let's leave here for any calculations we want to do. Okay? So we have statements of profit or loss account for the year ended 31st December 2013. Okay, so the first thing we need here is our sales value. Okay, so As with this now, look at here, we have sales and purchases. Which is our sales? From the rules of trial balance, all incomes are credited, all expenses are debited. Sales and purchases, which of them is income? Sales is an income. So this is my sales, this is my purchases. It's important to know. We've done trial balance in our previous class, so you should be able to determine which is sales and purchases. So here's my sales. I'll come and note it, sales, and the value is what? 2,204,940. That's my sales. Do I have any returns? Let's check. Yeah, I do have returns. Similar, I have returns, two values. Which is my returns inward, which is my returns outward? Returns inward is debited, returns outward is credited. So the debited one is my returns inward. So less returns inward. So my returns inward is 1,680. 1,680. So the value I have here becomes my net sales, or is called turnover. So net sales or turnover. So let's quickly do our calculation. Let's quickly do our calculation. So what I have is 2,204,940 minus 1,680. So what I have is 2,203,260. Okay, so now that I have my net sales to be this, I need to have my cost of sales. All right, so the first thing I have is my opening stock. The value of my opening stock is here, stock as at beginning. So I tick it, opening stock, which is 367.50. I have 367.50. So this is my opening stock. I tick marked. Okay, so I'm going to add my purchases. Where is my purchase value? This is my purchase value. So I can tick this now. This 2,054,550. Before I have, do I have any carriage inward? Let's check. Do I have any carriage inward? Because carriage inward must be added. I don't have any carriage inwards. No carriage inwards. There's no carriage inward. So I'm good to go. So I can add the values. So what I have is 360,750 plus 2,054,550. So what I have is 2,415,300. Okay, so I'm going to less returns outward. Returns outward. The value of my returns outward is the one on the credit side. So I can tick 11,760. 11,760. So if I remove this, what I have here is 2,403,540. So here's my costs of goods available for sale. Here's my cost of goods available for sale. So I will deduct costs closing stock. My closing stock is at the here at this place 323,610. 323,610. So what the value I'm going to have here after deducting this will be my costs, will be my cost of sale, cost of goods sold. So I have 2,079,930. So what I have here, is my cost of goods sold. This gives me cost of goods sold. I remove my cost of goods sold from net sales. What I have is my gross profit. So I have 123,330. Yes, my gross profits. Then I have what are my other incomes? My other incomes. Do you have any other income? These are expenses. Do you have any income? Tenement rates. I have commission received. Any other? Okay. So I'm going to put my commission received. Commission received. As you can see, commission received is credited and 52,500. 52,500. So if I add it to it, 52,500 plus 123,330. So I have 175,830. So my expenses. So all my expenses, then put them one after. The first expenses I have here, this are this non-current asset, this is non-current asset, this equity. Advertisement is my first expenses, so I put it down. Advertising. It is 3,810. The next is postage. Postage. Postage is 4,410. 4,140. The next is electricity. I have electricity. Electricity is 2,730. The next is salaries. Salaries is 8,510. Tenement rate. Tenement rate is 1,020. The next is telephone, which tenement rate is 3,030. Yes, my tenement rate. Telephone is 1,020. This is a non-current asset, furniture. I've used this. The reason why I tick, so you'll not be confused. So it's good you tick, so you'll not be confused. I've used my returns. The next is my bad debt. Bad debt are expenses. Bad debt, which is 780. The next is insurance. Insurance is 5,760. I've used commission received. So these are my statement of financial position items, debtors and creditors. Cash in hand will be used in statement of financial position. Bank will also be used. So out of everything here in the trial balance, the unticked ones are items needed in our statement of financial position, as you can see. So the next thing is the depreciation. Provision for depreciation. The first thing we have here is premises. So premises is 5% off. Don't forget, we have premises 150,000. We're going to get that value. Then the next is motor van. Motor van is 10% off. Our motor van is at 27,810. While the last is furniture. 10% off. My furniture is 33,120. So with this, let's determine the values. So 5% of 150 is 7,500. 10% of 27,810 is 278 approximately. Then 10% of 33 is, let's do the 10% of 10% of 27,810 is 2,781. All right. So with this, we have our total expenses that we can deduct from here. So let's determine our total expenses by adding up from here to here. These are expenses. Let's get our total expenses. 3,810 plus 4,140 plus 2,730 plus 8,5,110 plus 3,030 plus 1,020 plus 780 plus 5,760 plus 7,500 plus 2,781 plus 3,312. So the total expenses we have is 119,973. You can see it's lower than this. So 175,830, which is our income. Let's remove this. So minus 175,830. So we have 55,870. That means 55,857 is our income. Okay, so these are our net profits. So the total expenses is 119,973. Let's remove it. So what we have, if we remove this from this, we have which is 55,857. This becomes our net profit. Please, let's note our net profit. Net profit is 55,857 because it will be needed in our statement of financial position. As you can see, our net profit is this. Just like the format given, we have our net profit. This is our gross profit. As you can see, we have our gross profit. We added all incomes, remove all expenses, we have our net profit. So I'm going to wipe this off so as to solve the statement of financial position with the same question. All right. So let's note that this is our net profit because net profit will be needed in calculating statement of financial position. So let me quickly do the wiping. Now, we have a statement of financial position as at 31st December 2013, like this. We have our net book value. We have our accumulated depreciation, and we have our costs. Don't forget. So here we have our assets. Under our asset, we have our non-current assets, which you all know as your fixed assets. The first here, please note, we arrange our fixed asset where they last long. As you can see, premises will last longer than motor van, and motor van will last longer than your furniture. So let's arrange that. So we have premises. The cost of premises is this. I have 150,000 naira. If there's any accumulated depreciation, we are going to sum it up with the depreciation we calculated for the year. In our calculation, because of space, we did not. We did this, but we didn't put it out. Okay, so we need it. Alright, so this is my premises. No accumulated depreciation to be added, but the depreciation of premises for the year is 5%. So 5% of premises that we calculated earlier, as you can see from your notes, is 7,500. So it will be deducted to get the net book value. So we'll do the next, which is what? Motor van. Motor van. Our motor van, the cost is 27,810. And we are told to depreciate by 10%. So 10% of it is 2781. So it will be deducted. Then the furniture. Furniture, the cost is 33,120. 33,120, and 10% of it is 3,312. Okay? Now, we have used this, we've used this, we've used this. Furniture. So we don't have any other non-current assets. So let's close the two. This. What's the total value of this? I have 150,000 plus 27,810 plus 33,120. So I have 210,930. So what's the addition of my? I have 7,500 plus 2,781 plus 3,312. So I have 13,593. It will be closed. What will be left open? 150,000 minus 7,500. I have 142,500. I have 27,810 minus 2,781. So I have 25,029. 33,120 minus 3,312. I have 29,808. So this will be left open to determine our net assets. Okay, so the next is our current assets. And don't forget, current asset is arranged in this particular order. Stock comes first. Your stock here is your closing stock, which is 323. You have 323, 610. This is my stock at close. That's what you use in your statement of financial position. Then your debtors. Here we have debtors and creditors. Debtors and asset, creditors is liability. So assets are debited. So the one on the debit side is my debtors. So I'm going to pick this 146,460. 146,460. That's my debtors. So I have cash in hand. Cash in hand. My cash in hand is 10,560. Then I have cash at bank. Cash at bank. Cash at bank, which is written back 113,760. 113,760. So with this, all assets are recorded. Here, I can calculate all my current assets. So I have 32,3610 plus 323,610 plus 146,460 plus 10,560 plus 113,760. So what I have here is 594,390. Let me sum up all my non-current assets. 142,500 plus 25,029 plus 29,808. So what I have here is 197,337. So I can add this together with this plus 594,390. So what I have here is 791,727. So this is my net asset. So let's look at my equity and liabilities. My equity and liabilities, which has to do with my capital. Capital. Our capital is given to be. Capital is 483,720, as you can see. All right, so I'm going to add my net profit. Net profit. This is the net profit for the profit or loss that we prepared. 55,857. You can see from the accounts. So I have 483,720 plus 55,857. So I have 539,577. Let's check if there's any drawings. There's no drawings in the books. It's like let's see if there's any drawings in the book. We don't have any drawings. Alright, so we can continue since we don't have any drawings. Okay, no drawings, so this will be transferred here. 539,577. Okay, so that's my current liabilities, since I don't have long-term liabilities. So I have my creditors. Creditors here is, creditor happens to be the only liability we have. As you can see, no other liability. No other liability. Creditor happens to be the only liability we have. So with this, I can take this now. So creditor is 252. I have creditor is 252, 150. Alright, so let's sum it together. So I have 539,577 plus 252, 150. So I have 791,727. Alright, you can see that this value is equal to this. Alright, which means that my assets is equal to capital plus liability. So what you have in your assets, when you sum up your assets, your non-current assets and your current asset, if you sum them up, this is my non-current asset, this is my non-current assets. Once I sum it up with my current asset, I should have my total asset. So this is my equity. If I sum it up with my liability, I should have this value. So they should be equal. If they are not equal, that means my statement of financial position has issue. So thank you for listening. God bless.